One of the big problems we have in the UK, and it is something that we really have to change, really have to, is not only in terms of politics, but the, shall we say, the leaders of British capitalism and industry that are very, very fixated on short-termism and short-term winism. There is no such thing as like a 10, even 15-year plan going forward for the economy. And as a result, we see policies, um, bills, ideas that are often only really built to effect maybe a year, if not two, and then that's it. There's no thinking beyond that terminal thing. And this really is a massive problem because we've got to get beyond this and start to think long term. Because if we don't, we will always be battling these short term victories and then comes nothing after it. And this is a huge problem. And we're going to go over this exact thing because, as you can see, we're going to go over what is the cautionary tale of Arcadia for British capitalism and the implications this could have for us going forward, especially in the UK in probably one of its most fragilest times potentially going forward. We are looking at a no-deal Brexit, which will unleash huge economic harm. We are in one of the deepest recessions our country has seen for years. And it is going to be it's going to be awful next year for a lot of people. And it is just not going to be good. Rising unemployment, inflation, the pound dropping potentially like a stone. Things just aren't good. So we're going to go here to the Guardian's view, their head economist view on this cautionary tale and what it really means and what we need to learn from this. So before we get into that, please do remember to hit that like and share button, and of course down below there are links to my Patreon page as well as a one-off donation link, and thank you very much to the people who do support me that way. Now, on with the article. So, this is from The Guardian, as you said, and the title is "The Inevitable Collapse of Arcadia is a Cautionary Tale of British Capitalism." Philip Green wasn't much capitalism. That may sound a strange way to describe a very wealthy man who lives on an ocean-going yacht moored in the tax haven of Morocco. It perhaps sounds doubly weird, given that Arcadia consists of some of the best-known names on the high street, Topshop, Wallis, Miss Selfridge and Dorothy Perkins just among them. But even a halfway decent capitalist should have seen the writing was on the wall for large swathes of traditional brick-and-mortar retailing years ago. Green was unaware of, or just indifferent to this week's collapse of Arcadia, and the wrenching structural change in his own industry. Sure, life on the high street and in shopping malls has been tough this year, no question. The COVID-19 pandemic has put paid to businesses that would have otherwise been viable. These are unprecedented times, and it is a sign of how difficult life continues to be that Green has not even waited until after Christmas sales before calling time for the administrators. That said, the challenge from online retailers has been real and growing for the best part of 2 decades. Digital disruption is not a new phenomenon. It is now a quarter of a century since Jeff Bezos started Amazon. From the garage of his rented home, time enough for Savvy to sense the way the wind was blowing and prepare. Tough social distancing rules are a proximate cause of Arcadia's demise, but the truth of the events of 2020 merely turbocharged a process that was already happening. The trend will not be altered by the arrival of the vaccines and the merciful end of the lockdown. Because the change is big and permanent, it also threatens to be brutal. For manufacturing in the 1980s, read retailing in the 2020s, Arcadia is one example of the new reality. Debenhams is this week's other big retail casualty. That's the other. While it is convenient to blame the virus for the liquidation of the department chain store, its future looked bleak when the crisis actually began. My colleague Zoe Wood had noted that Debenhams never really recovered after the debilitating period in the hands of the private equity in the early 2000s. In a textbook example of short-termism, 23 stores were sold and the sites leased back to them on terms that have made Debenhams unattractive to potential buyers. Such are the perils of doing business in the British way. Green bought Arcadia in 2002, mostly with borrowed money, cut costs aggressively to raise profits, and refinanced on better terms, extracted a whopping 1.2 billion dividend from the company's biggest shareholder, his wife. In the early 2000s, this approach was all the rage. Load up on private equity debt, pare investment to the bare minimum, and invest in short-term profits, and top things off with a bit of financial engineering. With the City of London geared up for these sort of transactions, why waste time and effort in innovating and planning for the long term? Green certainly had an eye for a deal. What he lacked was the nonce to reinvest some of those profits into building a company strong enough to see off some of the more notable rivals. Early on, it came from Primark and Zara, but more recently from pure online retailers, which pay a much lower rent and business rates and were even better at cutting costs. There are other Arcadias or even Debenhams lurking out there. It would be brave to assume otherwise. Corporate debt has been rising for 8 years ahead of the pandemic, and much of it used to keep shareholders sweet. After the US and the UK was one of the biggest users of sharer buybacks in 2019, according to the Bank for International Settlements, there is certainly no evidence that the rising corporate debt has been funding an investment boon. The loans that the Chancellor Rishi Sunak has provided have saved many retailers from bankruptcy, but the crunch will come and the debt will have to be repaid. Clearly, some retailers have responded with what the economist Joe Shunter once called the gales of creative destruction. They have provided a digital offering to a new breed of more discerning customers who demand speed, ease of purchase, and a range of competitive prices. Next has responded to this existential threat and posed by such companies as ASOS and Boohoo, and is making money. For some retailers, 2020 has been a good year because consumers have diverted money that they would have spent on eating out or going on holiday to buy things for the home or keeping them amused during lockdown. The official measure of retail sales for October showed volumes of 8% above February's pre-pandemic levels, but it is the breakdown that matters. Online sales are up 53%, while in-store sales are down by 3%. The crisis in retailing is exposing how the alleged strengths of Britain's economic model are in fact a weakness. A flexible labour market is supposed to ensure that workers made redundant by one firm quickly find employment elsewhere. But it is not immediately obvious how the 25,000 workers whose jobs are at risk at Arcadia and Debenhams will easily get other jobs in retailing or in another sector of the economy that traditionally employs large numbers of low-paid workers, normally hospitality. High streets and city centres will need to change because there are too much retailers chasing a dwindling amount of customer spending. And that was the case until relatively recently, and they need to become places where people live and work as well as places where they can shop. But this requires some serious investment skills, physical infrastructure and innovation, rather than pile them high and sell them cheap and make a quick buck approach that model is now being shown as bankrupt. And this is just typical capitalism, but I think you're going to see this a lot next year. I think the what he said there, the Arcadia and Debenhams, I definitely think there are more online high street retailers who are on the edge, and I think they really are. And I think we could see many that are hoping that the Christmas sales are going to try and save them, but I think next year you could see potentially more, and it's just how many happens, and then this whole economy that we have built towards comes crumbling down. And this, once again, is highly pushed and highly prioritised by the Tories. But as once again, short-termism doesn't work. We need to think more long-term. So with that, please do remember to hit that like and share button, and of course, please do remember to look down below and think of becoming my Patreon. And of course, there's a one-off donation link called Buy Me a Coffee, where you can, well, buy me a coffee. And thank you very much to the people that do support me that way. And as always, thank you, and we'll see you all next time.